All right, let's talk about something that sounds, well, kind of crazy. What if I told you that you could take less money than you'd spend on a new phone and turn it into over $1 million? It sounds like pure fantasy, right? But today, we're going to break down a strategy that claims to do exactly that.
So let's just get right to it and ask the big question. Can this actually be done? Can you really take a starting stake of under 800 bucks and watch it explode into a seven-figure sum? I mean, it seems totally unbelievable. But, the math behind it, well, that's where things get interesting.
And get this, if you were to follow the mathematical blueprint perfectly, you don't just squeak past a million. No. After just 11 successful moves, you'd actually be sitting on over $1.5 million. The power of this idea, at least on paper, is just immense. So, okay, let's dive in.
To really get how this works, we've got to look at this simple, almost elegant math that's powering this whole idea. It all boils down to one incredibly powerful concept.
It's called the doubling strategy. The idea is simple. You start with your money, and with every single successful step, you double it. It's basically compounding, but on steroids. The formula is just 2 to the power of n, where n is just the number of times you win. Deceptively simple, right?
Okay, now look at this table. This is where you really see the power of compounding just go wild. The first few steps, it's nice growth, but it's not mind-blowing. But then look what happens near the end. That jump from step 9 to 10 almost doubles your cash to over 780 grand. But the very next step, the last one, slaps another 780,000 on top of that, launching you way past $1 million. That final leap is the magic of exponential growth right there in action.
So the math adds up. It's solid. But how in the world would somebody actually try to pull this off in the real world? This is where that beautiful, clean theory smacks right into a much, much harsher reality. This is where the blueprint becomes an all-or-nothing gamble.
Yeah, this is not something you can do with your savings account. To even have a shot at doubling your money this fast, you have to play in some very high-risk, high-reward arenas. We're talking about things like Forex and crypto trading using insane leverage, really complex options trading, or even sports betting. Basically anywhere you can possibly find a 100% return on your money in one single move.
And the rules for this game? They're brutally simple. You start with your cash. Then, you bet your entire account balance, everything, on one single outcome that has to double your money. If you win, you scoop it all up and you go again. But, and this is the most important part, you have to hear this, if you lose just one time, at any step along the way, you lose it all. You are wiped out. Back to zero. Game over.
And that right there brings us to the crucial, gut-punch turning point in this story. We've seen the incredible, exciting potential, but now we have to talk about the overwhelming, almost certain probability of failure. The dream very quickly turns into a total statistical nightmare. Let's not dance around it. The source material we're looking at is crystal clear. It calls this, and I quote, a suicidal financial strategy. This isn't just high risk, it's framed as a form of financial self-destruction. And the reason why? Well, it all comes down to one single staggering number. And there it is. That number, 99.99%, represents what's called your risk of ruin. Even if, and this is a big if, even if you had a perfect 50-50 shot of winning each step, which you absolutely don't, the odds of winning 11 times in a row are just astronomically small. Your chance of failure isn't just high, it's practically a certainty. You have a 99.99% chance of losing everything. Just look at this chart. That gigantic bar on the left, that's the probability that you lose all of your money. And that little tiny, almost invisible sliver next to it, yeah, that's your chance of success. Seeing it laid out like this really drives it home, doesn't it? The odds are just so lopsided. You're betting against a nearly insurmountable wall of probability. So why is it so completely doomed to fail? Well, first off, there is zero margin for error. One slip up, one bit of bad luck, and poof, it's all gone. Second, can you even imagine the psychological pressure? Could you really, honestly, bet $390,000, your entire net worth, on a single coin flip? Then you've got the gambler's fallacy, that feeling that you're due for a win, when in reality, every single event is independent. And finally, you've got market realities. Things like fees, spreads, commissions. They make it so you're never even getting true 50-50 odds to start with. The deck is always stacked against you. Okay, so if the doubling strategy is basically a financial trap, what's the alternative? How can you actually use the power of compounding without facing certain ruin? Well, thankfully, there is a much smarter and more disciplined way to grow your money.
Let's just compare these two approaches side by side. The gamble is all about all or nothing bets. On the other hand, disciplined investing means you only risk a tiny fraction, like 1 or 2%, of your money on any single idea. One is a suicidal strategy that relies on impossible luck. The other is all about controlled, diversified growth over a long time. I mean, the difference is just night and day. So, a realistic path comes down to 3 key things. First, strict risk management. You have to make sure you can survive the losses. Second, you compound your profits safely in a controlled and diversified way. And third, you have to adopt a long-term view. Real wealth isn't built in 11 lucky coin flips. It's built over thousands of small, disciplined decisions.
So after going through all of this, what's the real lesson here? What should we actually take away from this $1,000,000 promise? Why even talk about a strategy that's pretty much guaranteed to fail? Because believe it or not, it teaches us a really important lesson.
Here it is. The doubling strategy should never, ever be confused with a real financial plan. It's a thought experiment. It's a theoretical concept. Its true value isn't in trying to do it. Its value is in how powerfully it illustrates the incredible force of compounding. It shows us what's mathematically possible, and that can inspire us to apply that power in a much safer, more sustainable way.
And all of this leaves us with one final question to think about. This whole exercise really forces us to draw a line in the sand. What's the difference between a calculated risk, which is absolutely essential for growth, and a blind all-or-nothing gamble? Knowing that difference, that might be one of the most important lessons in finance and maybe in life too.